Hello guys, welcome to the channel. I've been away for a while and we're back now. So today is the 19th of July and I want to just go over a few pairs on what we should be expecting for the coming week and also in a way educate us on some of the strategies that we can also employ to catch some of the big moves coming in this coming week. And one of the things I always preach to people, especially my friends and students, is higher time frame rules everything. A lot of the reasons, one of the major reasons why you are not profitable is because you spend too much time on the lower time frame and you don't use higher time frame levels. Higher time frame levels will make you money, not this lower time frame thing you guys waste time fidgeting in. But that being said, let's just break down this chart. This is Euro USD and let's look at what we can be expecting for the coming week. So this is on the monthly time frame. It's not like it's so important, but I just like to have a very wider perspective, especially for the levels, for the key levels. So we have this level here on the monthly time frame that we can be looking, that can be a target. And I can also see this sort of trend line here. Okay. So on the weekly time frame, this is the major level that price broke out of. Now there is this wick here on the weekly time frame. That feels like it's a significant level. Now, one of the things I like to look at is where can price reverse from? What are the things that can make price begin to reverse, turn, and change its momentum basically. If you look on this weekly time frame, you can see this area here where price is currently at. That is basically a supply level. Let's just mark this out here. It's basically a supply level where price is currently reacting from. So what we have is basically this level as a support level turned resistance, tapping into this supply zone here. So if you look at this level, this is these two. You don't have to be bothered about this one. Focus on the closer one. These two are reacting on this key level, broke, retested, and it's here. So let's go to the daily time frame. So remember on the weekly time frame, we mapped out this area. It feels like it is an area of significance. And if you look at this on the daily time frame also, we can see that price has been maintaining this momentum line, climbing and climbing, going up. Right now, honestly, if you want to buy this pair from here, it is fine. But I am not comfortable buying at a resistance. That is just me. So upon the break of this counter trend line, you can expect further rally of price. And the most likely target is somewhere here. That is just it. I can't look for anything more than that. If you knew what you were looking for, when price rejected this zone with a confluence of this key level trend line, this was also a good time to enter the market. You could have gotten in around, especially around here, when price had formed this weak rejection, especially with this second rejection and it starts to push. Definitely your stop loss should be below here. Then you should be targeting at least a 1:2. But whenever you are looking at something like this, you should just know that by the time price gets to this trend line, you are at break even. The reason is because if you're not at break even at that point, price can easily collapse. So you just want to secure profit. Not necessarily secure profit, but more like secure that trade. Because if it breaks past it, fine. But if it's not ready to break past it, you will be losing money. And even at that point in time, there is still even a short-term trade for you if you know you're looking at still at a break of this momentum line. But the point is that to take this sell is not really viable because you know that you are in a very upward momentum. So we're looking at the overall. So basically, to say, let me just remove this key level. I know it's there. I don't have to look at it all the time. So what we can now look at is that if price breaks this trend line, you should be expecting a sell. If price begins to maintain and at least breaks this 4-hour trend line, this 4-hour counter trend line, we should be expecting a continuous buy to at most this level. But remember, we are in a supply zone in around all this area. So that's something to look out for. Let's look at gold. Let's look at gold. Let's go to the monthly time frame. Gold is extremely bullish. Extremely bullish. So on the monthly time frame, what can we see? I will just mark out that monthly high. That price might just be drawn to just here. So on the weekly time frame, there's really nothing here. On the daily time frame, okay. Let's draw this trend line, this momentum line for price. We have something like this. Okay, let's go to the 4-hour time frame. Now, where are the levels that we should be looking at here? We have this level. Price has perfectly reacted off of this level. Beautiful. I don't see any other thing that is clean. I don't see any clean level. I don't see any clean level. The only thing that is still here is somewhere around all these zones. If price begins to break or violate some of these zones. So for now on gold, I don't have any entry. I don't have any setup. I don't have anything I'm looking at because I can't see anything that is exciting me. The only thing that I can see might look a bit reasonable is if price makes it all the way up here. That's where I'll be looking at. I'll get interested. For now, there's really nothing to really whet my appetite. No, there's nothing. There's nothing, honestly. Let me delete this trend line and focus on the current ones we have here. So we have this trend line, and this is what we can focus on. So if price drops down to maybe some of these levels, we can be looking for reversals or something like that. But for now, there's really nothing to look at, honestly. There's really nothing to look at. I can't even take a reversal trade from here. I don't like the level. It's not strong enough. I want it to get into this place. Then you can look for maybe some of those counter trend line plays. So for now, there's really nothing on gold for me. Nothing on gold for me. Let's look at USD card. Let's look at USD card. So on USD card, let's look at this. We have this kind of supply level here. Let's go to the weekly time frame. On the weekly time frame, we have obviously this trend line. Price has tapped into this this demand. I beg your pardon. This demand level. Price has tapped into this demand, and it's reacting off of this trend line and the demand level, which is a buy indication. So let's just delete this. We know that there's a demand there. Let's work with this one, which is a support zone. why I like support and resistance zones is that I feel it is better for me to set my stop loss. It feels very I can set my I know that price is reacting within this range. So I can set my stop loss outside the range in a place I feel it is safe. So that's why I use a lot of support and resistance myself. Let's go here. Okay, so what do we have here again? Sorry. So this is a double bottom, which is a very, very powerful signal. A double bottom is a very powerful signal. Very, very powerful. We're on the daily time frame right now. And on the daily time frame, we have this point here as a key level. And we also have these areas here. Those are the only places that we should be interested in to look for price to get into. Let's go to the 4 hour. On the 4 hour, you can see how price came into that zone very correctively and broke out. This is all money. This is all money. From here, at least you should be below this 83, just making 90. You're looking at least a 1:2. Well, that's if you got in there. If you got in a bit earlier, you have a tighter stop. You're looking at your 1:2. Maybe you wouldn't have smashed it, just barely. But I don't go 1:2 is my primary target. I'm looking at just a 50% win rate. I don't even care for more than that. Just 50%. If I win 5 out of 10, I'm okay. And most of the losses are break even. So you see that at the end of the day, you are making a lot of money. You don't have to 1:3. That's just I have from my years of experience, my years of being in this market, I just realized that 1:2 is the best risk to reward to chase. Honestly. 1:2. Consistently chasing that 1:2, it will make life much easier for you, I tell you. When we got into trade in 2019, people were all about 1:3, 1:3, 1:4, 1:5. That thing really messed with people's heads because if you don't get it, you feel like you're not achieving anything. Some people make money with just only a 1:1. So don't stress yourself. 1:2 is very, very okay. That is a very good risk to reward, I tell you. So because with a 1:2, even if you take 10 trades and you lose 5, you are still up. You still make 10R. If you remove, subtract the 5 that you lost, you still have 5R. So that's even if you lose 7 trades and you win 3. Say you take 10 trades, you lose 7, remaining 3. You take 3. That 3 becomes 3 times 2, that's 6R. And remember, these 7 you lost might not all be losses. Some might even be break evens. So you, at the end of the day, even if you lost 7, you're just down just 1R, and you won only 3 trades out of 10. So imagine you had some of them. Say these 7, 3 were break evens. So you're still up 2R. Please don't pressure yourself on excess radio. Don't let anybody fool you. 1:2 is very okay, and you can be very profitable with it. So for now, what are we looking at? Last week, I took a trade here on USD CAD. When price came here, when I'm taking a buy, I want it to be on an area that has supply. I want it to be on an area that has supply. I didn't like something like this break and retest. I don't take it as much as I used to because I think these particular ones, if this place had maybe break retest and price went up and came back to that zone with other confluences, I can take it. But I prefer zones that have supply. So maybe double bottom, double tops, that kind of thing. So here, I think I took it at the break of this counter trend line. I think this was when I took it. I took it at the break of this counter trend line. So Nothing too serious, nothing too fancy. Just it's nothing too complicated. So for now, honestly, I am still looking for the buys on USD card because the weekly time frame, remember where we are coming from. 1, 2, 3, 4 touch. This is a momentum trend line. And we are at a good weekly support level and a good weekly demand level. So, and the demand level was untested. Now, on the daily, price also gave us a double bottom. So, we should be looking for all buys. So, I was very comfortable and confident to take these buys here. So, these kind of things, at the break of this, let me tell you why I can't take something like this so that it makes a bit of sense. You see this zone here. Look at this. These are all bottoms. Now, watch where I can watch how this one goes. Price breaks like this. What do you do? If price breaks here, I can put my stop loss below. I'm targeting this untested supply zone because I know that this is one of the likely places where price can reverse. I'll just take this is basically what I'm targeting. This is what I targeted. And also I must clear all these wicks here. Very, very important. See them. If you don't clear them, you are wasting your time. Now see the difference here. With this particular one, even though there's a trend line there, where is the zone? Where is the zone? You're looking at this, right? Where do you put your stop loss? Now, this zone is not necessarily bad because there's a bit of this demand, there's everything here. But see what I now have to combat. You take this, I now have to clear this. And by the time I get here, I'm just 1:1. It makes no sense. That's not a trade for me. That makes no sense. It just doesn't feel right. And again, what you have to understand about trading is that oftentimes it is experience, it is intuition. Not everything, some things just don't feel right. I like to take my trades from extremes. I used to take it from random zones, say there's a trend line confluence here. I draw this, I look at this. I also use divergences. And if you see something like this is also a good sign because it's showing a lot of exhaustion and all that, but there's no divergence. I like divergences. If you look at this, there's a bit of divergence. I like divergence. But I don't know. I'm just not comfortable taking these trades anymore. I like it at extremes. This zone is where I want it to come to. So that's just it for USD card. I think I've spent a lot of time talking about it. Let's go to Bitcoin. Let's open Bitcoin. So we have this point, okay? Price broke and retested it and moved up. Then we have this point. Price broke. It has not retested. Right, there's nothing on the left. Let's go. What is the trend line that the momentum on this particular area? All right, this is it. So on the larger time frame, there's really nothing going on. So let's keep on scaling down and see if there's anything we are noticing. Let's go to the 1 hour. On the 1 hour, the zone that makes a bit of sense is just down here where we have this reaction, these areas that push price here. This is like a supply area. So price, it's all moved this. So these are the areas that we expect price to come and look for, where we can possibly be looking for some sort of reaction. Nothing real there. So that's just it. If this thing was a bit deeper into the zone and it broke this counter trend line, I would have been interested in taking it, but it was too, it's not deep into the zone. And if you look left, there's an untested supply here. I don't use, I am saying supply, but I'm sure it might be confusing for some people because I understand, I'm using every concept together. I understand it. My major trading strategy is support and resistance, but you have to understand where supply and demand is and understand where price will most likely go to. And also, if you look at it, even if there was a kind of imbalance here, it has cleared it. So the buys are not bad for this. The buys are not bad at all. But it's not just deep enough. It just feels like price is floating. If price had come in, say price came in, let me use the brush tool. This price came in here like this. I'll look for this to take that, but it's just too far away for me. So for Bitcoin, for now, we are still extremely bullish. But I'm just looking for price to come into this zone and I see what it wants to do. If there was a trend line here, it would have made sense. Let's draw the trend line and see what it gives us anyway. So we have this trend line here. Let's keep it anyway. Let's just leave it there. There's really nothing else to see here, honestly. Nothing to see here. Let's go to GBP USD. I don't know what else. This is okay. Let me just do the analysis again. I don't know what exactly I put there. So on GBP USD, well, our zones, we look at these areas, very interesting areas that we can expect price to come to. You also have this area on the weekly time frame, and we have these areas. Okay. On the daily time frame, this is what we have. All right. So what are we looking at now? These are the kind of zones I like because one, this is an extreme level. This is a key level, and there's this double bottom. There's a trend line. I begin to get excited when I see things like this. So what I'm looking for is the break of a counter trend line, with all other things being equal. Let's go to the 1 hour. So I think I was looking at that trade and I was looking at it like this. Yeah, I think I was looking at something like this. But honestly, this is an early entry. This is an early entry. But I didn't take it anyway, so it's not really an issue. The only way this thing begins to make a lot of sense is say price breaks that 4-hour trend line, the 4-hour counter trend line. Let's delete this. It's confusing me. I know that it is there. No need to look at it again. So when price begins to break this 4-hour counter trend line, in the short term, I'm sure there was a trade there also. If you look at this area, like in the very short term trade, there's this key level, there's supply around these zones. Then if I see a zone on the 1 hour, I usually take the trade from the 5 minutes or the 15 minutes, but mostly the 5 minutes. So all parameters were lined up. Price broke this. Price, this is most likely where I would have seen it, if I'm being honest. 24, so I'm good about 30. Yeah. Is there any other thing on the left? 24 pips. I'll just go with 28. I think that clears it. There's no other thing. I look at this week here. I want to clear that week. I've seen this kind of things. It looks like it's a joke, but that price will just come there and tap it. And you'll be like, damn. And at least at the bottom of this, I should have been breakable if I was on this trade by now. Then we are targeting lower. So that's just how, this is just basically my strategy. Break retest of a key level. But my levels are this particular type of trade on the lower time frame, it fails more frequently because it's the lower time frame. But you see these types where you are from the weekly, you are looking at it from the weekly time frame, all this kind of larger worldview setup. Wow. Once price breaks this, you'll be more confident, more comfortable to take the trades. That's just the truth. But in the meantime, you can always take the smaller time frame plays. I think that's all. I don't think there's really any other pair that you should be bothering yourself about. I've looked at Euro USD, GBP AUD always presents opportunities sometimes. I took this trade on a different chart. That is not the trade. I took that, but it's a different analysis. Let's look at what I was looking at here. I like to break down the chart because when you break down the chart consistently, you begin to form your narratives in your mind consistently. There is no, you begin to form it. You have to continuously keep on breaking down the chart, breaking down the chart. That is why I watch other people do tutorials and they show you the chart after they have marked it up. I prefer starting afresh and breaking it down afresh. So that's why you see me removing chart, removing drawings and starting again. So what do we have here? I think we just have this zone, nothing much, just like a double bottom area. Yeah, I think not as much. We have this. Yup. Then I think, let's see, this is the trend line on the daily time frame on that key level. Now, what is this still bullish? This price still bullish. If you look at this is the weekly. The weekly is still bullish. Came, yeah, but it's still overall it's a bullish pair. Even though it's been consolidating for weeks. But now see this low, see this high. Price hasn't broken this low. Price hasn't broken this high. So we're within a range. So when I saw this confluence of this trend line and this key level on this at the bottom of this range, considering that the weekly was more is called a bit bullish, then I begin to get interested immediately. So if we go to the 4-hour, we already have a 4-hour divergence already. But even apart from that, let's go to you have to clear the momentum of that current price action move, that current price leg. So if you clear this momentum, you can see that I think that was where that other trade was. So something like this, you should be so basically targeting a 1:2. I don't know where I entered, I can't remember. Let me open, I don't know, it won't show up here. If I open the other one, it won't. This is a window capture, 1:2 always. So something like this is basically what I was looking at, I'm sure. I can't even remember, but I'm sure this is something of this nature. If you wanted to go earlier, you could have entered at this point when this chart pattern here, at the break of this, let's take this. But you see, when it broke this, it didn't form a good candle. What I usually do in times like this is this. I usually say when price breaks and maybe the engulfing candle is so large and I cannot enter at that point, I set entries at, say, a limit order at these other blocks and wait for price to return to it. But you see, something like this did not return. So those are some of the disadvantages. Another way you can do is like you look at a zone area within that space. Let's open the 30 minutes for better clarity. If you zoom in here, we are getting confused. Let's delete this. You see this kind of zone, this break and retest area. Break. So when price broke this on say on the 1 hour and you were not able to enter, you can now come back and just set an order here. Remember, always clear this week. So this is 86. We'll just go 80 or just go 80 to make sure we clear it basically. Then you can target, at least you see the supply zone here. That's a good place to exit the market. So it's not rocket science, honestly. It's not rocket science. You will lose, you will definitely lose some trades, but yeah, you will definitely win a lot. And these are more high probability, I tell you. They're more high probability. So guys, I think that's it for today. I've covered a lot. Even showed some things I wasn't supposed to show, but well, one of those things. Everyone's interpretation of the market is unique. So take what you can take from this and modify it into your strategy and help yourself out. Have a nice day, guys. God bless.